Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools David Meyer and Lou Whiteman giving a 1 to 10 rating to Wabtec, Westinghouse Air Brake Technologies Corporation for long. Yeah, we'll be calling it Wabtec. Ticker symbol WAB. First, we'll rate the strength of Wabtec's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. David's at a 7. Lou, you're at a 6.
Yeah, so Wabtec is a lot more than just air brakes. Let's just say that. They are the leading manufacturer, I'd say, of railroad locomotives, freight cars, and other vehicles. They have some other equipment too. It's a great business, but here's the thing. It's a limited market. There are only so many companies buying rail equipment, and the trend in rail has been something called PSR, which is basically getting more out of the equipment you have versus buying new. So that does kind of hit on demand. But I end up here at a 6. They're very good at what they do. They've consolidated the market. They have some pricing power. They are looking international. As an investor, this is both a business I admire and one where I'm very sensitive to the constraints and worries about being boxed in. So I end up slightly better than 50-50 with a 6.
Yeah, I agree. I think it is a very interesting business. Look, it is the maker of parts for just about every inch of a train, not just the brakes. And it's solid. Even if it's not going to grow as quickly as it once did anymore. And the other thing is it does make some money for products for buses, for mining. There's even some power generation. And one thing that I do like that I would like to comment on is like many industrial companies, it does use long service agreements to help improve its margins, basically helping not only sell products, but having users get more out of their products.
Right on. Let's talk about management next. A 10 is Warren Buffett. A 1 is Homer Simpson. David, both of you are at 8s.
Yeah, CEO Rafael Santana came from GE Transportation, GE being where I worked for a little while, so he has a good pedigree. They do know how to train CEOs and leaders there. He's presided over some nice growth since taking over. But it's really going to be the future performance that defines his career. But I think he's doing a pretty good job so far.
Yeah, he's been driving this train, shall we say, through most of this period of growth, including some big acquisitions. I would also say, if you listen to the conference calls, he's very thoughtful in terms of industry dynamics. And given the limits to this industry and demand, I think you need someone who's really, really understands the business. I said before, I do have some concerns about just growth and all that as a stock, but I can't think of anyone I'd rather have run the business. So I'm a solid 8.
He'll definitely do a better job than Casey Jones, at the least.
Yes.
We'll go on to financials. A 10 is a Fortress. A 1 is Yikes. These are a little lower. David's at a 6. Lou, you're at a 5.
Yeah, I'm probably recency bias here a little because last quarter was a relative disaster compared to expectations, top and bottom line miss. I do think that there's a lot of macro going on there and not a reflection of what's going on with the company. But again, they're selling products into an industry that is trying to restructure itself in such a way that it will use fewer of Wabtec's products, which is, a headwind. The good news is they generated a ton of cash, almost $2 billion in cash from operations last year. They're doing a decent job returning that cash to shareholders in the form of buybacks and dividends. Dividend was just increased by 25%. They did announce a plan. They have another round of cost cutting here. They think they can get costs down by about $100 million. I'd say they're doing what they can, but there's only so much to be done here. So I'm at a 5.
Yeah, I think for me, margins are continuing to expand, but yeah, that top line annual growth is expected to slow, and management is signaling mid-single digits over the next 5 years. As Lou said, the company generates plenty of cash flow as a result, which is good, and it has been increasing its share of purchases significantly. So that's also probably going to be a pretty good use of capital. But we'll see how that growth plays out.
Lou, let's talk valuation. How will Wabtec stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
So I do hope that maybe they can partially solve the growth opportunities international. So I do think there's hope for growth. And although they did just hike the dividend, I do think there's probably more that they can do in the years to come. So thinking about this as a total return, I think this can be a market performer or slightly better, which, hopefully the market does 7. So I'm at a 5 to 10%, probably on the high end. Safety is a 6 to me because I don't think there's any risk of Wabtec going away or us not needing its products. I just don't know if it's a slam dunk to beat the market. That's more my problem.
Yeah, I'm not sure exactly what I need to follow up with there, as I pretty much agree with everything. If you look at it you'll get a little bit of dividend, a little bit of return from the dividend yield, a little bit of return from the share repurchases, a little bit of growth, world GDP type growth. But I think for me, the thing is if they can continue to get those efficiencies into the business, get those margins moving in the right direction, that'll help stabilize some of that cash flow such that they can continue to do more of those things that we just talked about, which is increase the dividend and increase the share repurchases. But I agree, the safety rating is just above average at a 6.
It's a pair of Dan Kaplingers right there, 5 to 10% with a safety score of 6. Lou, is there a company in Wabtec space that you like better?
So years ago, this would have been easier because I really love the manufacturers and lessors of those huge containers you see on the back of the trucks and rail cars. I love that business. But most of the good ones have been taken out by private equity because they love the business too. I'm not going to say better here, but there's a company called Arcosa, ACA, that's at least one for the watch list. They were spun out of Trinity Industries, one of those container companies. Today, they're a maker of transportation, construction products. Stock is up 340% since the spinoff, and they're doing some interesting things. So, yeah, one for the radar here.
From me, if we're sticking in the transportation-related industrial sector, fools could look at PACCAR. It's a maker of commercial trucks of all different sizes. It's a bit more cyclical, but it trades at a bit more of a reasonable valuation. It generates lots more cash flow and has a bigger dividend yield. So, yeah, the ticker symbol is PCAR.
Thank you to both David and to Lou. They've given Wabtec an overall score of 6.2 out of 10, despite respect for management, which was higher at an 8. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Kenvue. Till then, Fool on.
I'm glad you brought up services, David, by the way. All of these business, it's the aftermarket where you make money.